So here we are. Yes, it happened. The slowdown. I, for one, am stoked. A chance to breathe. A chance to work on my vegetable garden. A chance to put together my workbench. A chance to put together my new studio. It's a work in progress. I'm going for the dark and moody thing. But for those who are wondering, and I'm guessing that's most of you, in fact, I got a call last week from a subscriber who has been wanting to move here for like 15 years. He finally said to himself, enough is enough. We're moving to Bend. It's not a matter of if, it's just a slight matter of when. So, what's happening in Bend right now? Well, the market is... one of my favorite words is perspective, right? It's important to have a healthy perspective, to take a look outside of our own bubble and echo chamber that we find ourselves in and really see what's actually going on out there. Yeah, I'm kind of stalling here. Because the truth is something that some people don't actually really want to hear. The market is still a warm market, bordering on hot. Because after all, let's face it, the market of the past 2 years has been a burning hot inferno. So now we are still seeing a great market. I had clients just 2 weeks ago win a house that was in multiple offers, and that was in like the $700,000 range. And I heard of another client from an agent in my office who won a deal that was in the multi-million-dollar range. Also with multiple offers. Multiple offers are still happening. Does that surprise you? Does this shock you? If you watch the news, the sky is falling. But remember the word perspective. The market here in Bend has been great since, carry the two, 2014-ish? Remember, 6 months of inventory is considered to be a balanced market. And we haven't seen that since like the Great Recession. It normally takes about 9 months of inventory stacked up before people, really get frustrated enough to take price reductions that would ultimately affect the overall price and averages of a market and really start lowering the prices. And we're currently sitting at 2.2 months of inventory. So perspective. But I'm seeing all these price reductions. Oh man, how many times have I heard that over the past month? Can I tell you why you're seeing all these price reductions? In one word, greed. And that's okay. But let me explain how it works. Typically there are one of two factors here at play. One, the actual seller is greedy and isn't really fully aware of what's happening in the market. All they know is they want $1 million for their house, regardless of what the agent recommends. Because so-and-so got $950 for their house just up the street 6 months ago at 123 Banana Street. But this isn't $1 million house. It's not as nice as 123 Banana Street, and the market isn't as hot. In fact, 123 Banana Street was probably listed at $850 and they had 20 offers on it, and it escalated all the way up to $950. So this overzealous seller doesn't really have a complete picture of the market. And maybe the house is worth $900, but it's not worth $1 million. The second thing that happens is the agent is competing against other agents in order to win the listing. And they will say anything in order to win. So maybe the house is only worth $850, but the agent's gonna look like a rock star if they can promise the seller $1 million. And if the seller doesn't know any better, who would they choose? An agent that shows up to their house and says their house is worth $850, or an agent that shows up and says they can sell it for $1 million? The net result of both of these scenarios is the same. After some time in the market, everyone gets soft and goes, oh, maybe that wasn't right. Maybe the market's just not responding. In either case, we need to do a price reduction. So although we may see prices dip, even the averages dip a little bit in the short term, the overall market in Bend is still bright. And I'll tell you why. It's still Bend. All of what Bend is builds its own demand. People love it here, people want to relocate here, and some of them, a lot of them, somehow, seemingly lots of them actually, have cash. And they don't care what the interest rates are. Now, if we were in another state, one with more open development codes, let's call it. Builders and developers could grab a chunk of land outside of town, develop it, and just throw up a neighborhood, build tons of homes, and meet the demand. But here in Oregon, we have this urban growth boundary situation going on, where we can't develop land outside of the UGB, it was basically outside of the city limits, until we use up every little bit of land on the inside of the UGB. Well, the bummer is that we are already almost completely full, and the last time that we tried to expand the UGB, it took 7 years to get approved. 9 years to get approved. It took 9 years to get approved. Seriously, they started the process in 2007, and they didn't get it fully ratified and approved till 2016. Yet, the city hasn't lifted a finger to start work on the next urban growth boundary expansion. Which means in the coming years, maybe 5 to 10 years out, we're gonna be completely out of developable land. Is developable a word? Again, when too many people come in and nobody wants to leave, and we can't actually build enough homes for all these new people, inventory will, on the macro for Ben anyway, stay low, which means prices will stay high. So whether you get involved in the market now, next month, or next year, not a whole lot is probably going to change, except interest rates. But more on that in a second. Right now though, let's go ahead and take a moment to say thank you to our sponsor, the Kromm Real Estate Team. Whether you're looking to buy or sell, the Kromm Real Estate Team can help. Was that too forward? Hey, just let us know down below, what do you want to know more of with regards to Bend? We're working on a new weekly live stream, sort of like a podcast, and we want to know what you want to hear about. It can be anything from neighborhoods to city regulations, how to get ready to stage your house, to what kind of place to go for lunch. Let us know down below so we can get working on it. So, interest rates suck. Yes, that's true. But if you think about it, interest rates sitting in the high fives is still a lot lower than inflation, by a bunch. And interest rates, although you lock in typically for like a 30-year mortgage, most people are making a move or making a refinance around the 5-year mark, plus or minus. So it's not like you're stuck with this interest rate forever. Now, anytime interest rates start jumping up like they have been, people start going back up onto the fence and waiting it out to see what happens. Which is why we've seen a slowing of the market recently, and that we've finally seen a return of, more normal spring inventory. But nevertheless, buyers pull back. So last week, just when interest rates started to stabilize for like the third week in a row, the Fed announced the latest rate hike of 0.75. Womp womp. Now this is interesting because most people would think that the Fed rate hike would also affect mortgage rates hikes in parallel. When the Fed hike goes up, the interest rates go up exactly the same. And I mean, because the mortgage rates did shoot up right after that announcement, but then came back down the next day. So when investors leave the stock market because of the volatility stirred up by the Fed, they usually run to the bond market. When people put their money in bonds, usually the yield goes down, which is what affects mortgage rates. And so mortgage rates come down. It's very confusing stuff. But I think the point is, as the Fed continues to raise interest rates, the mortgage interest rates could actually stabilize or even come back down a bit. Gosh, I hope so. And remember, all we need is some stabilizations in the rates for those buyers to kind of, come back down off that fence and get back into the market. Once that happens, we could be back to a normal hot market. Gosh, just what are we even talking about anymore? Look, if you want to move here, move here. Give us a call, we'd love to chat. Oh, and by the way, you've officially reached the part of the video where I kindly ask you to subscribe to our channel and hit the little bell notification, and go ahead and give this video a like because it really helps the YouTube algorithm and helps push this video out to other people who need to know this kind of stuff. We sincerely appreciate it. That's all for now. Thanks again so much for watching, and be sure to stick around for the next video appearing right here, I think. Cheers, guys.